This next question is for both Warren and Ajit. It's from Ben Knoll, who's a Minneapolis shareholder who's been a shareholder since 1995. And he says, in an interview this past year, Todd Combs said that in first meeting you in 2010, he told you GEICO is better at marketing and branding, but Progressive is a data company and data is going to win in the long run. But it appears you did not prioritize data analytics at GEICO until a decade later when you made Todd CEO. As business units like GEICO age and need new strategic direction, I wonder if Berkshire's hands-off management approach is a source of vulnerability. Will you please review your thinking on changes made at GEICO and explain how Berkshire is structured to react if the Berkshire CEO sees that a business unit is strategically off track? And Ajit, I hope you will continue to update us on yours and Todd's progress at remedying the data analytics shortcomings at GEICO.
Ajit, would you like to?
Yeah. As Warren has pointed out in the past, one of the drawbacks that GEICO is faced with, it hasn't been doing as good a job as matching rate with risk and segmenting and pricing the product based on the risk characteristics. This has been a disadvantage at GEICO for a few years now. We are trying to still play catch-up. Technology is something that is unfortunately a bottleneck, but there again, we are making progress. And equally importantly, we have hired people who are much better than what they inherited in terms of data analytics and pricing and slicing data. So yes, I recognize we're still behind. We're taking steps to bridge the gap, and hopefully certainly by the end of 25, we should be able to be along with the best of players when it comes to data analytics, whether it's pricing, whether it's claims, or any other factor that drives the economics of the insurance business.
I would add that equating rate with risk obviously is important in every line of insurance business. I mean, that's what you're involved with, is deciding whether a given rate offers us the chance or the probability that we will make a little money on it, and that sometimes we're only risking losing a little, and sometimes we're risking losing huge amounts. But GEICO and Progressive has done a better job in that recently. But our fundamental advantage at GEICO, of course, is that we have lower costs than virtually anybody, and that cost advantage is been dramatic. We've driven our underwriting expense ratio below 10%, and there's just very, very, very few companies that can compete with that. So it isn't. It's not in the least a survival question, and it isn't even exactly a profitability thing. But we would rather have X% of the market than a half of X%. But we roughly, I think in the month of March, we were just we didn't lose policyholders, and we got 16 million or whatever it is of them, and we've got the lowest cost operation. So it's not a threat. It's not remotely a threat to survival. It's not a threat to even profitability. But on the other hand, we would like to be growing with something that is the best model around in the insurance business of delivering at a low cost. And we now have a recognition that we didn't have back when Leo Goodwin started in 1936. But the same principle that worked then is that if you can offer somebody a good product cheaper than the other guy, and everybody has to buy it, and it's a big business, it's very attractive to be in. And GEICO is a very attractive business and has got its lowest cost thing, and it does have to do a better job of matching rate to risk. But our low costs have masked the fact that for a while that we could do without progressing as much as we should have in the matching of rate to risk. And now Todd has been working intensively at that, and he's made a lot of progress, but there's still work to be done. But in the meantime, we're not going to shrink, and we're going to we should make better underwriting profits than most companies in the auto insurance business.